FY25 earnings conference call. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risk that the company faces. The company assumes no responsibility to publicly amend, modify, or revise any forward-looking statement on the basis of any subsequent development, information or events or otherwise. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Atul Daga, Chief Financial Officer of the company. Thank you and over to you, sir.
Good afternoon and welcome all of you to our earnings call for Q3FY25. First and foremost, wishing you all a very successful and a happy 2025. We often talk about a lull before the storm. Most part of the calendar 24 was a lull for cement industry for multiple reasons known to all of you, which we have been discussing from time to time. The lull ended somewhere in December on a positive note. The storm is a positive storm, and we have benefited from a continuous increase in demand, which has also boosted the sentiments on cement prices. We have seen a movement in realizations. Q3 average 1.4%, which is QOQ. North and West saw the best performance in terms of price improvement, which was more than 3%. January, we have further seen improvement in prices in Central and West. North remains the star performer, as I said, increasing prices and profitability to the highest. And talking about stars, well, this was an offer on the table which we chose to invest into. I'm talking about our investment in Star Cement. As you know, it's only a non-controlling financial investment. We have been trying to identify opportunities to deepen our presence in the northeastern markets. Hopefully, this investment will help us understand the markets better and what are the opportunities in those markets for us to grow. When we had done the transaction, there were lots of different numbers floating in the market. I want to clarify. We have purchased 8.42% in the company at a total investment of 776 crores. Let me now touch upon India Cements. Open offer was subscribed 110% concluded on 21st of Jan at a price of 390 per share. We will now hold about 81.49% equity in the company, and there are regulatory processes to be followed to bring it down to 75%, which we will be doing as per timelines allowed. This will result into our average cost of equity at 359 per share. Net debt in the company as at 31st December 24 is 877 crores. Thus, the EV of the company at our acquisition cost works out to about 12,075 crores for a capacity of 14.45 million tons. I leave it to your calculators and your exchange rate interpretations to derive the dollar per ton cost of this acquisition, which is certainly not $120. It's way below, but it's below $100 per ton. Further added to that, the debt will get reduced with cash generation from non-core assets, which the company has. We have started engaging with our team at ICL and studying the opportunities that lie before us. The initial review gives us an opportunity of debottlenecking some of the capacities, 2 or 3 plants. There is a debottlenecking opportunity, as well as some brownfield expansion opportunities exist in another set of 2 or 3 plants, which will help us in our growth journey in years to come. Our focus is to turn around the performance of ICL in less than 12 months, starting January 25. There will be some return-based capex plans which are being worked upon. As you know, we entered the company only on 25th of December and have not spent even a month studying their operations. Allow us 1 quarter to revert with our full plans. Kesoram, we are awaiting the last of the approvals for transfer of mines in Telangana and Karnataka, and we are tracking every step. There are multiple steps within the transfer formalities. We are tracking all these steps, and we expect to consolidate the assets of Kesoram within this financial year. Organic capex. All our project sites are progressing well. We target closing this year at 185 million tons of capacity. This includes the 2 acquisitions of Kesoram as well as India Cements. Let's talk about demand. Demand seems to be opening up, which is good for the industry. We are seeing it across all sectors. Pent-up IHB demand, infra growth, urban housing growth. Urban housing growth is maturing or slightly slow, but still continues to consume cement. Rural markets are, of course, driven by the housing demand and continue to grow strong. A point worth mentioning here is that rural demand should be positive with the good monsoons that we have seen, good crops and good harvest, which will generate good cash flows for the rural markets. Capex programs have been gaining momentum from the end of Q3, but it is still a long way to go. There are stimulus for mass housing programs which are coming back. Cement demand clocked an improvement in December 24 after being subdued in October and November, and is likely to further increase as we speak in the current quarter 4 FY25, with a pickup in government capex and demand overall. Central government capex, which logged 20% plus YOY growth in 24, was down about 12% in April to November 24. State government capexes were also down. Capexes by PSUs were also not growing very strong. We believe that the government capex will start improving, and consequently cement demand shall start improving from January 25 onwards. Whilst April to November was a slow period for cement demand in India, sorry, I believe that the demand momentum is picking up and it will remain strong in the years to come. And Indian cement industry is gearing up to meet the surge in demand in the coming years. At UltraTech, work is in full swing for adding additional 10 to 15 million tons of organic capacity in the year 2026. This will take us to a 211, 212 million tons of capacity at the end of our expansion program. Talking about our efficiency improvement programs, which are also on course, clinker conversion ratio of 1.45 for this quarter as compared to 1.44 in Q4 last year. Lead distance is at 377 kilometers this quarter as compared to 400 kilometers when we started this journey on efficiency improvement program. WHRS was at 324 megawatts, up from 278 megawatts at the end of Q4 24. As far as WHRS is concerned, we had spelled out our targets to reach 450 megawatts for UltraTech capacities. This target will go up to 511 megawatts of capacity, taking into account the additional WHRS expansion which will be done at India Cements and Kesoram. 511 megawatts of WHRS, which will be completed by FY27 on our 211 million tons of capacity at that point in time will account for 24% of our power requirement. Similarly, renewable energy is up at 752 megawatt at the end of this quarter from 612 megawatts. And as for targets, we had given out a target of 1.8 gigawatts by the end of FY27, taking into account the requirements and opportunities thrown up by ISM and Kesoram. This target is now standing at upwards of 2 gigawatts, about 2.1 gigawatts is what we are looking at to complete. And this will support about 30% of our power requirements on the 211 million metric tons of capacity. Lastly, about fuel. At our size of operations, we don't have too much of a choice but to use coal also as a fuel, given the overall global supply situation for petcoke. However, we have been continuously increasing our petcoke consumption, with the fuel mix reaching about 58% of petcoke this quarter. Our fuel costs have come down accordingly to about 1.76 kcal from 1.84 per kcal in last quarter. Based on current spot price, we expect our fuel costs to be around 1.7 kcal in the near future. And to conclude, we achieved an EBITDA per metric ton of 964 this quarter, which jumped more than 30% over Q2, and we expect further improvements going forward. Thank you. Over to you for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We'll take a first question from the line of Sumangal Nevatia from Kotak Securities. Please go ahead.
Yeah, good afternoon. Thank you, and congratulations for a great set of numbers. So first on the volume growth, is it possible to share what would be the contribution of whatever 6-7 days of India Cement in the results, number one? And if you could give some more regional color as to which are the regions, I mean, this 10% odd growth, which regions we've grown versus the industry, higher or lower? Yeah, I mean, that's my first question. I'll ask the second one later.
Or I'll forget your question. So we haven't taken into account the volumes of India Cements in those last 7 days for reporting our growth numbers. It does not make any sense. So this is only the UltraTech organic growth. I've already forgotten your second part of your question.
So I just wanted some regional color. Which regions have done better than the other regions, and where we think we've gained market share?
North and West continue to do well. I would imagine East was at the lowest rung as compared to the other regions.
And South will be the lowest or the weakest?
East, I would imagine, would be the lowest, and South, then you climb up to Central, North and West.
Okay, and what is our sense of industry growth in this quarter?
Industry growth, I think we'll have to wait and watch for some more numbers, but my sense is we should be looking at somewhere around 5%.
Okay. That's quite heartening to see. Every quarter we manage to beat the industry. So great work, sir.
We are the leaders of the pack.
Yeah, clearly. So my second question is more on the South region. Now we've seen 4 acquisitions in the last year, 2 where we've involved. mean, what would be our strategy? I mean, whatever you can share with respect to South over the coming year, with respect to our brand penetration, use of India Cement, Kesoram brands, and then any market share target versus where we are today.
No, so there are no market share targets. That's the easiest one to answer without having a target. But yes, we would definitely want to keep growing. If I look at the capacity utilization of India Cements, they were at about 57% for the quarter. Certainly, there is an opportunity for improving the capacity utilization from that target entity. Out of their 14.45 million tons, how much is 13 million tons is in the south. About 1.5 is in north and 13 million tons in south. So there is the opportunity to increase capacity utilization. Second point, Kesoram, yes, they are slightly better off in terms of capacity utilization. They are operating at about 70%. I don't remember last quarter. So 70% is what they were operating at. So there might not be too much of headroom to improve, but maybe 4-5% we could improve capacity utilization in the southern markets for the Kesoram set of operations. As for brands, all our parcel brands, we will wait and watch. It's too early to say how we will look at the various multiple brands of India Cements. Kesoram brand is also equally powerful. So it's more about, there's no rush to change the brand, but at the same time, brand transitions will happen at the right time.
Yeah, and just a follow-up, sir. Last time, the profitability of these assets are quite low, even in terms of efficiency, etc. So earlier also, when we had merged JPA, there was some dilution on the blended, which eventually got transited to our levels of margins and efficiency. So what should we expect when we start reporting all these consolidated and blended numbers? What is the transition time we are looking at to bring these assets to our level of efficiency and margins?
Look at least 12 months to improve the performance of India Cements to bring it up to a reasonable level. And as I mentioned, that there are WHRS investments which have to be done for India Cements also, which is a return by itself. So WHRS investments would typically take, if I'm counting work start from January 25, we would start seeing the benefits of that only towards the October-December 26 quarter. So there will be one leg of improvement that you will see towards the end of 25. Sorry, and then further improvement after efficiency improvement based capex programs get completed. Similarly, on Kesoram, there are opportunities to improve the cost of production as well as realizations. There's a lot of opportunity that exists to improve our logistics cost on a consolidated basis. Now, from our 25, we had how much? We'll now reach about 60 million tons of capacity in South from 20 million tons? From 20 million tons of capacity. So obviously the density of our network increasing will help us reduce the logistics cost significantly. So there are lots of opportunities that lie ahead of us.
Got it. Thank you so much. I'll join back the queue.
Thank you.
Thank you. Next question is from the line of Amit Murarka from Axis Capital. Please go ahead.
Hi, good evening. Thanks for the opportunity. So, my first question is on India Cements. Is there any thought around any brand transition or tolling arrangement for India Cements as well, or will it be sold under Coromandel?
Yeah, I think give us some time, Amit. We are studying the opportunity. We've just entered the company from 25th of December. So Perhaps next quarter results, we'll be in a better position to give more clarity.
Sure. And capex, I think you had earlier guided for a number, but including the Kesoram and India Cements, is there anything? I think you had guided 8 to 9,000 crores earlier for 26 as well. So what would it go to now?
No, so 8 to 9,000 crores of capex is on our UltraTech balance sheet. India Cements balance sheet needs to be studied, and it has to be, it has to have its cash flows to meet those capex requirements also. As for Kesoram, I think we were looking at 400-500 crores of capex for Kesoram, which gets baked into my overall numbers of plus minus 9,000 crores for next year. Because Kesoram these are the units which we are acquiring, which will get absorbed in UltraTech from day one. India Cements is a separate listed entity.
And just lastly on fuel cost, you had earlier mentioned that by December all your higher price contracts will get over.
Yeah.
So is that done now?
Yes, that's done.
Okay, but I think you said 1.7 rupees kcal. That would still be higher than I think market price. I think is 1.4, 1.5. I think for petrol.
Why I'm saying that's why I qualified that statement by saying that we will have a fuel mix of coal as well as petcoke. We will not be able to do only petcoke. Had I been in a situation to do only petcoke, the cost could come down dramatically since we'll be using a mix will remain slightly higher.
Sure.
And if it is 1.7, it could become 1.6 depending upon spot market. My colleagues were telling me between 2 days the spot prices of petcoke have gone up by $4. So it's a continuously moving target.
Got it. And lastly, for Kesoram, could you provide 9 month financials as well?
We haven't seen that yet. It would be there on their own website.
No, I think they're not showing cement business.
It's there as part of notes. It's there. Anyways, I'm asking Ankit to share that with you separately.
Okay, sure. That's all. Thank you very much.
Yeah.
Thank you. Next question is from the line of Rahul Gupta from Morgan Stanley. Please go ahead.
Hi, thank you for taking my question. Atul sir, I understand, like you said, utilization rates for Kesoram and India Cement will improve over a period of time. Can you help us understand how to look at the overall volumes for next year? How does Kesoram and India Cement high utilization rate help you gain further market share on volumes? So that's first question.
Okay, so we will go into the next financial year with about 185 million tons of capacity. It's in decimals, but I'm just using a rounded number of 185 million tons. We would look at a double-digit growth next year on our expanded availability. And I would assume a capacity utilization of anywhere around 80 to 85%.
Okay, that's heartening to hear. Thank you so much. My second and last question is, I remember until last quarter you used to give a comparison of fuel cost on a consumption basis and fuel price. So I see fuel cost has come off by 6% sequentially. Can you help us understand where the price are on a blended basis?
$125. $125, right? $125 per ton. It's not mentioned.
Okay.
Yeah.
Okay, thank you so much. That's it.
Thank you.
Thank you. Next in line is Prateek Kumar from Jefferies. Please go ahead.
Yeah, sir, my congrats for great results. My first question is on your leverage. We have not been given consolidated net debt. That was last quoted for 2Q at 8,800 crore, including India Cement now open offer. Where are we looking at our current net debt? Also, another related question.
Let me just pause there, Prateek. Let me just show this to you first. Give it to you first. So, 3,142 crore is the cost of open offer. Now, India net debt was 12,141 crores December. I'll request you to do the math, note down the numbers and can do the math. 877 crores is India Cements. That takes us to 13,018 crores. Open offer will be about 3,142 crores. That would be the consolidated net debt. 16,160 crores at the end of open offer.
Sure. Okay. And why do say India Cements net debt as like 877 and not like they used to have like 2,500 crore on net debt? Clarification there.
877 crores only. That's the magic of UltraTech Cement. That's why that was in the lighter vein. As I said, the earlier expectation was that the EV per ton we have paid is $120. It's not $120. It's about $97 or $98 per ton. The debt actually, as of December, is 877 crores.
Okay. So they will be still publishing their financials, right? So that will now reflect a lower number versus.
2 days ago, they had their board meeting. They have published their results. They haven't published a balance sheet, but their press release carried. I have seen their press release, which carried the debt numbers.
Sure. Okay. I'll say that. And just one question on this again, India Cements. Is there also evaluation of potential merger between two companies and you like sort of issuing like in case of Kesoram share swap, likewise can happen in India Cements?
Too premature, too early to comment on that. We have to evaluate the assets and how do we operate them. What is the profitability that we can bring it up to? There are lots of litigations that need to be resolved from that company. As I mentioned, there are a lot of non-core assets which we will want to sell. There's no point in transferring those non-core assets onto the UltraTech balance sheet. So as of now, I think give us some time before we can spell out clear plans.
And then last question on your realization, we reported 1.5% for the quarter average. How is the exit pricing versus the quarter average for third quarter?
Sorry, exit. There are too many. Exit December.
Exit December pricing.
Exit December over?
PQ average.
Over Q3 average. So it was marginally up. A percentage up. Yeah, na Q3 average. Yeah. Just once again, Pradeep. Yeah. 1%.
So, these are my questions. All the best.
All right.
Thank you. Next in line is Jashandeep from Nomura. Please go ahead.
Hi, sir. Thank you for the opportunity and congratulations on a good set of numbers. Sir, my first question is on limestone, especially in Tamil Nadu. Even if we look at India Cement, I think most of their limestone reserves are in Andhra Pradesh, Telangana region. How is both UltraTech and India Cement placed on longevity and brownfield optionality in Tamil Nadu? Is there enough limestone in Tamil Nadu with India Cement?
Yes, as of now, we have a visibility of more than 25 years of life on the India Cement. They are old plants, so Shankar Nagar and what is the other name? Sankri. The two plants which are old plants and they have a visibility of more than 25 years of life.
Okay. That's good to know, sir. And my second question is largely on operating cost. I understand that on an organic basis, India's UltraTech has set a target of reducing it by 300 rupees per ton. But on a console level, will the FY26 will see a significant increase in operating cost, given that India Cement is on the highest end of the cost curve? And since before acquiring this asset, also you would have this asset you would have studied. So any idea of how much capex or a ballpark figure will be required to bring it to the efficiency level of UltraTech? That's my second question.
Yeah. So to the second part of the question, we entered the assets only on the 25th of December. We are studying. There will be capexes. The no-brainers are the WHRs, renewable energy, which are return-based. but there will be some upgradation capex also, which the team is studying, and we will revert back on their capex, the capex that we want to do. As far as operating costs are concerned, I think we have started seeing reduction in their operating costs in the first month itself. And while I don't have an exact date or exact period by which the costs will align, but you will have end 26 December, October-December 26 is when the WHRS implementation. That's a long lead capex project which will get completed. So by that time, you would see an alignment of their costs with our costs.
Okay, understood, sir. And just last thing on the Shankar Nagar plant. If I'm not wrong, there was some. I think they had applied for an EC extension or something. So they are sorted on that front. Just a clarity on that. For limestone.
I'll have to study that. I have to find that out myself. Not aware.
Okay. No worries. Thank you so much. I'll join back with you.
Thanks.
Thank you. We'll take our next question from the line of Pulkit Patni from Goldman Sachs. Please go ahead.
Sir, thank you for taking my question. Sir, in the previous acquisitions that we've made, rebranding has been a very big kicker in terms of the differential realization that UltraTech gets versus other brands. Now, in this case, if rebranding is going to happen over time, at least not immediately, what are the levers where you can see such a significant cost cut that we'll be able to improve profitability? So first of all, what today is the realization differential between UltraTech and India Cement in the same micro market?
Just 1 second. How much is the difference? Sorry? 20 to 25. That's on a selling price basis. Selling price basis about 20 to 25 rupees a bag is the difference. And we are, as I said, we are evaluating. There are low-hanging fruits in rebranding at the ICL units. We will start seeing rebranding as we progress. So day one, you will not have 100% rebranding, but in due course of time, maybe 9 months, 12 months, you will have a rebranding effort. But first quarter also, we will start seeing some plants doing rebranding.
And also, Sanghi, you used to give a quarterly roadmap of when your EBITDA per ton would actually merge with the main brand. Any sense on how that will be for Kesoram and India Cement? 8 quarters, 10 quarters.
All of UltraTech Cement.
Yes, sir. We are trying to project profitability of UltraTech Cement only.
No, but don't ask me questions about Sanghi Cement.
No, I'm just saying that in terms of projecting that improvement in EBITDA per ton, is there a roadmap whether we'll be able to do it in 6 quarters, 8 quarters, 10 quarters earlier? I mean, just a sense on that.
Also, I was saying, no, I don't know why you mentioned Sanghi Cement in our call, sir. That's right.
No. I'm so sorry. No. I meant Binani. Sorry.
All right.
Yeah.
So we are looking at least 12 months to turn around the performance of the India Cement assets.
And when you say turnaround, you mean the same profitability that our mother brand gets, or?
No, not the same. Maybe 200, 300 rupees lower.
Okay, sir. Thank you.
Yeah.
Thank you. We'll take our next question from the line of Ritesh Shah from Investec Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, first one, are we looking at any contingent liabilities specifically after the Supreme Court judgment which has allowed states to levy taxes on minerals, including limestone?
So first and foremost, that we also hear that there is thinking within the central government to do something about this judgment, because there are a lot of PSUs getting impacted in a far significant way. Secondly, we are impacted by the levy only in the state of Chhattisgarh and Rajasthan. we are not impacted. However, India Cements had a liability. No. So, okay. Neither India Cements. Sorry. So we are not looking at any adverse liability. However, now you would have read about Tamil Nadu wanting to levy a new tax, Karnataka wanting to levy a new tax. So these things will surface for the future periods.
Okay. So nothing adverse.
No, nothing adverse.
Okay. Great. So second is at industry level, what is the sort of supply that we are looking at based on your estimates for, say, FY25, FY26, FY27? Broad numbers would be quite useful.
So as I mentioned, we would do about 15 million tons of capacity, and taking other bigger players, we would see about 50 million tons of capacity getting added in FY26.
Okay, that's useful. And sir, you have given separately a revenue number for UBS on slide number 26. Is it possible you quantify the number for 9 months and also EBITDA and PAT numbers? And if there is an incremental game plan over here?
Don't have it immediately. I'll share it with you, Ritesh.
Sure. And sir, what's the game plan on UBS stores? The count has increased. I think one of the slides mentioned the significant contribution of grey cement sales by UBS.
Yes.
So are we looking to monetize this? How should one understand it?
This is the way we are monetizing it. It is helping us sell big volumes of cement in the retail market.
So secondly,
about listing it as a separate entity, no, there's no plan like that.
Okay, sure. This is helpful. Thank you so much.
Thank you. We'll take our next question from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
He's not there, I think.
Mr. Ravi, can you check if your line is on mute?
He's not there in the queue.
Since there is no response, we'll move on to the next question from the line of Naveen Sahadev from ICICI Securities. Please go ahead.
Yeah, thank you for the opportunities and indeed great set of numbers. My question was first on this Northeast plan. So I think a year back we had floated this or incorporated this company by the name Lithium Valley, if I'm not wrong.
Yes.
So what is the progress there? Is there land? I mean, since you incorporated, I believe could have been with the local partner and land and the location is identified, but we haven't heard anything there. So if you could
so because mines is required, and Northeast is seemingly a complicated market with involvement of tribals in land ownership, mines ownership. So we haven't been able to identify a clean mines land as yet, and as soon as we do that, we could you will hear from us.
My second question was then on the outlook for pricing in South. One of your peer in South mentioned of expectation of huge intense competition or competition further rising with the ramp up of Penna and India Cement, even Kesoram to some extent. So would you concur with that pricing in South could continue to remain subdued despite demand picking up, or how should one look at it?
If demand picks up, my guess is prices will also improve.
Understood. And my last question, sir, can you just mention what is the consol net debt?
I just gave that number a minute ago. I'll go back to it again.
It was the enterprise value calculation, I'm saying.
16,160 crores after taking into account the money required for open offer.
Okay, 16,000 is the current net debt. Understood. Thank you.
Yeah.
Thank you so much.
Thank you. We'll take our next question from the line of Patanjali Srinivasan from Sundaram Mutual Fund. Please go ahead.
Thank you for the opportunity. Am I audible?
Yes, please. Go ahead.
Yes, sir. Sir, one thing I noticed in our presentation, so our power cost per ton has actually stayed more or less flat, like in over a year, whereas our share of green energy has gone up from 24% to 33%. Can you tell me, like, why the drop in costs has not really happened here?
So, yeah, from 424 to 402, that's the drop that has happened. And if I were to, I think, index it with the coal cost might have gone up. So it's relatively lower. So, the delta will be small between solar power, generation cost versus landed cost. There is about 40%, 35 to 40% difference between renewable energy and the thermal power cost. So this is what it is. I will, in any case, deep dive and revert to you.
Sure, sir. Thank you. And just one last question. Are capex numbers for 26 and 27?
So 26 will be around 9,000 crores and 27 will taper down. Maybe 7,000 crores to complete our expansion program.
Okay. Sure, sir. Thank you.
Thank you. Next question is from the line of Bhavin Chheda from Enam Holdings. Please go ahead.
Yeah, good afternoon, sir. Very good set of numbers across. So one few questions. One on the consolidated debt, which you mentioned 16,160, that includes the number of what you said, India Cement 877 crores?
Yes, please. And the open offer money, which will get paid on the 4th or 5th of February.
Sure. But sir, when I'm seeing the India Cement numbers which were available for September 24, their debt was roughly above 2,000 crores. So what has happened in last 3 months, or is there some different calculation what must have happened between these 3 months? How could India Cement debt come down so sharply in 3 months?
So they have announced the December number. I don't know what was their September number.
No, so December the balance sheet was not disclosed, so that's the reason.
It should be, they have mentioned it in their press release, and we have taken over a debt of 877 crores.
That's roughly a net debt number.
Yeah, net debt number.
And the additional question on that press release itself is what I was going to. The press release was the revalued assets which you will be consolidating. So there is a revaluation of roughly 5,300 odd crores, where the land, mining land and plant and machinery was revalued before the UltraTech taking over consolidation. So can we assume that the large part of revaluation has happened on the land part?
Mainly on land.
So we should assume that could be the unlocking potential when it comes under our fold?
As I mentioned, there are lots of assets, non-core, which I count. So land, large part of the land is required because that's the mine land and the plant land. Besides those, they have lots of land which are not fit for a cement grinding unit or an integrated plant or a bulk terminal. So those we would want to monetize.
Sure. And that's the last question on the lead distance. Very good to see a reduced lead distance in the quarter, which was, I think you mentioned the number of 377 kilometers. And now with new acquisition coming into fold, so you have much more capacity where you can service the market from nearby plants. So would there be enough space to again reduce this lead distance when you look at your overall portfolio?
Certainly. We would look at this number dropping down further 5-6%.
That would be great, sir. Thank you and best of luck. Yeah.
Thank you.
Thank you.
Before we take the next question, I wanted to clarify about the question which was asked previously on the power cost. There was a one-time charge which was levied by Andhra Pradesh government, which amounted to about 48 crores, which we had to account for in the December quarter. And that is why the December quarter number is looking slightly higher. The impact of 15 rupees. So 402 would drop down to 387. Yeah. Go ahead, please.
We'll take our next question from the line of Rashi Chopra from Citigroup. Please go ahead.
Thank you. Just continuing on the cost. So from here on, like how much more improvement can we see? I think earlier on you were mentioning about 300 rupees by September 26. So how much of that is already done and how much can come?
I haven't calculated. You have a calculation? Okay. So let me complete this in the March quarter, Rashi. We'll revert. We'll give it in the presentation.
Okay. That's fine. Then on the realizations, you mentioned that the December exit is about 1% higher than the 3Q average, right?
Yes, please.
And January there were further increases in Central and Western India?
Be about 1.5%, yes.
In Jan, 1.5%?
Yes, as of now.
Got it. And what are the expectations, for the remaining quarter?
Yeah, we definitely want prices to go up further. That's our expectation.
Got it. And just lastly, on the capex, so this year, what will be the full year capex? So next year you said was 9,000 for FY25.
Also, we should cross 9,000. We should be 9,000. We are already at 6,300 crores. We have already completed 6,300 crores. January, March should be doing 3,000 crores more.
This is pre-Kesoram, right?
I'm sorry?
Rashi, can you use your handset mode, please? I'm sorry to interrupt.
Sure. This doesn't include Kesoram, right? This 9,000.
Yeah, this does not include Kesoram.
Okay, thank you. That's it.
Thank you.
Thank you. Next question is from the line of Satyadeep Jain from Ambit Capital. Please go ahead.
Hi, thank you. Sudhakar, just one question on coastal transport. You already have Sevagram. Just wanted to understand, there was obviously another asset in play in the vicinity, but didn't seem UltraTech was taking maybe competition CCI since you're already there. I just wanted to understand what's your experience being. Is that plant would be similar in utilization and profitability to other plants you have? And when you look at the overall mix in transport for you going forward, do you see higher share of coastal transport in the mix?
Yes, we will see an increase, but in the overall ratio, today it's about 3%, will not go beyond 5% of the overall mix. As far as the Sevagram plant, the Kutch plant is concerned, it's a low draft area which has made it challenging for berthing, bigger vessels. So my belief is rail is becoming available in that market very soon. So rail network will start improving the capacity utilization from that market.
So even for Sevagram, you would see, so currently utilization level you're indicating for that plant would be lower, but with the inland railway line coming up, utilization.
It will pick up. It's a hot market, it will pick up.
Okay. Thank you so much.
Thank you. We'll take our next question from the line of Shravan Shah from Dolat Capital. Please go ahead.
Hi. Most of questions have been answered. Just a couple of things, sir. In the fourth quarter, how much demand at India level we are looking at, and if possible for FY26, how much are we looking at cement demand growth?
FY26, it will definitely be a double-digit growth. And quarter 4, generally, it's a very high quarter. What is the base that you are comparing it with? Over Q3, obviously, it will be growth over Q3 easily.
No, sir. YOY. Sir, I'm looking for from an industry perspective and not from your definitely you have said you will be growing double digit.
I was talking about industry perspective. Industry will definitely achieve a double-digit growth next year, given the fact. Sorry, you're asking about industry. Industry would do about 6-7% growth. We will do about 10% plus growth. Is what our game plan is for next year also.
And for this quarter, fourth quarter at industry level, 6-7%. That's the number one can look at, or it could be a much higher.
Easily, it should be higher. I think the way January-March quarter is, it should be higher.
Okay, got it. And sir, what was clinker utilization in the third quarter, and is it possible how much clinker capacity we would have added in this 9 months, and what is more are we planning to add?
So clinker added during this period is 6.7 million tons of clinker was added. Another 3.35 million tons is about to get launched in this quarter, clinker capacity. And the next question that you asked was about 76% is the capacity utilization.
Okay. And in FY26 also would be a close to 10 million ton kind of clinker capacity will be adding?
Yeah, 10 million tons, 6 and 6, 9, exactly 10 million tons.
Okay. And sir, you mentioned that the cost reduction plan previously you said 300 odd rupees that we were looking at by FY27. That now we will be disclosing this number after the fourth quarter results. That's what you mentioned?
Yes, sir.
Okay. Thank you, sir, and all the best.
Thank you.
Thank you. We'll take our next question from the line of Anuj Jain from Globe Capital. Please go ahead.
Good evening, sir, and congratulations on the good set of numbers. Just wanted to understand, I mean, in today's presentation, you have mentioned that for the mother of Kesoram will require additional approvals for those two mines, Telangana and Karnataka. And in opening remarks, you have said that by financial year end, you will integrate all the Kesoram with UltraTech. I just want to understand, generally, these states, take much longer time than we anticipated. So how much delay one can expect, for the integration?
So I have kept sufficient buffer in my hands before telling you the end of the year. So as I mentioned, these are at the last stages. There are 2 or 3 approvals pending within the authorities, which should get completed very soon. And we are very confident there will be no slippages beyond March 25.
Got it, sir. Thank you so much. That's it from my side.
Thank you. Next question is from the line of Rajveer Tandon from Ventura Securities. Please go ahead.
Hello, sir. Thank you for the opportunity to give me the question. So the first question was...
Rajveer, can you use your handset mode, please?
Yeah. Hi. So the first question I had was for the 8,000 to 9,000 crore capex that you are planning, will you be taking any additional debt for that?
No, this can be funded by internal accruals.
Okay.
We expect our debt to start going down from next financial year in small steps. Next year, because capex plan is big, so you will not see too much of debt reduction, but it will not go up.
So this 8,000 to 9,000 crore figure is for how many years?
For next year.
Okay. So can you give an estimate?
No, the capex, if you're asking 8,000-9,000 crore is next year, and the year 27 will be much lesser. There will be the remaining elements of our organic growth plans, which has to be the completion stages. So 6,000 crores plus minus is what we are looking at.
All right. So my second question was, do you see the EBITDA button figures for India Cement and Kesoram to reach the levels of UltraTech by FY27?
Yes, please.
Yeah, all right. Thank you so much.
Thank you. Next question is from the line of Sanjay Nandi from VT Capital. Please go ahead.
Yeah, thank you for the opportunity, sir. Congrats on a good set of numbers. Like most of the questions are answered, sir. Can you please help us with the regional utilization levels if possible, sir?
I think I had answered that question, and we had East, which was below 70%, and other regions were in the 75 plus minus 75%.
Got it, sir. So thank you for the opportunity, sir. Wish you all the best.
Thank you.
Thank you. Next question is from the line of Prateek Kumar from Jefferies. Please go ahead.
Yeah, thanks for the opportunity again. I have just a couple of clarifications. Firstly, on FY27 capex of 7,000 crore, so that would be excluding India Cement related upgradation of.
That's right. Yeah, this is only on our expansion program, which was going on. Sorry.
So including capex on which is at Kesoram is like not so material, but India Cement capex included, capex may again like sort of still be 8,000-9,000 crores kind of.
Yeah, if you have to count the capex of India Cement, I don't know how much will it be. It will be certainly more than 500 crores, because 500 crores was what is being earmarked for Kesoram.
All right. And one clarification on branding. So India Cement has like host of brands, and then obviously there are associations like IPL, etc. So when we integrate these brands, so these will like sort of migrate to UltraTech. You said that there's 20-25 rupees gap there, and then all these other associations like IPL also like sort of moves to you, or there's some royalty fees there. How does that work?
IPL? No, there's no cricket with us. So that company CSK has already been hived off long ago, and there's no IPL as in cricket IPL, right?
No. So that was the branding partner, right? The India Cement is used as a branding partner for CSK.
Oh,
maybe I'm mistaken, but
okay. No, we will not be. No, we will not be. We will not be branding partners for cricket. That is one. And you asked something else also. No.
And the various brands of India Cement moves to UltraTech?
So all the various brands are part of India Cement, the brands are owned by India Cement as a legal entity. They continue to be with that company. So CSK as a cement brand exists, which will be owned by us. CSK. Cement brand, yeah. But there's no association with cricket.
Right. That is there from my side. Thank you.
Thank you. Next question is from the line of Kamlesh Jain from Lotus Asset Managers. Please go ahead.
Yeah. Thanks for the opportunity, sir. Just one question on the part of, sir, are there any loans and advances which being given to India Cement which has resulted in lower net debt? Just a bookkeeping question.
I'm sorry, what?
Have we given any loans and advances to India Cement?
No, UltraTech has not given any loans and advances.
Okay, great. So can you summarize like what was the reason for the debt to go down? Has there any been land sale there? Because I believe in such a short period, such deals can't happen at like say.
No, so we have monetized assets which has helped release cash flows to reduce debt.
Okay. Great, sir. Great. Thanks a lot, sir.
Yeah.
Thank you. Next question is from the line of Ishwar Arumugam from iTalk PMS. Please go ahead.
Sir, thank you for taking my question, sir. So the first question I had was Southside cement prices, sir. It has been very dull this quarter, and the price increases have not been able to stick much. Moreover, there used to be a disparity between the TN Kerala prices and the Andhra and Karnataka prices. But TN Kerala used to be better price than Andhra and Karnataka. But the prices are converging now. Is it because players are fighting to gain market share, or is it just because of the demand scenario?
I really won't be able to comment on that micro analysis that you're doing, but my belief is Andhra Pradesh is going to improve demand sentiment, and it will help. It will benefit the entire South, which will help improve prices in the respective markets.
Sir, you said that you've grown from 20 million tons to 60 million tons in South, sir. So what would be the approximate market share gain for the company in terms of volumes?
In terms of capacity, I believe South is 180 million tons, 196 million tons of capacity. So we are very close to 30% capacity share.
Okay, right. Thank you. And what is the outlook and future plan for UBS, sir? Is there an increasing trend you see of people in the urban areas preferring building material solution instead of cement? Or what is the outlook there, sir?
Outlook is very bright, especially in tier 2 towns and tier 3 towns. UBS as a platform is convenient for individual home builders. It becomes a one-stop shop for the home builder to get all his needs, and our interest obviously remains why to service the customer as also to increase the throughput of our sales.
Right, sir. Right. And one question I had was on the inland waterways you used, the national waterway you used for the grinding unit in Pataliputra, sir. So is there any plans to ramp up the capacity? And if we do ramp up, how much logistic cost decrease can we look at?
So it's too early. I think we will definitely want to ramp it up. It is eco-friendly, cost-effective, a high volume opportunity. It will be definitely of big benefit.
Right. So this was more of a test run, sir?
Yes, please.
Okay. Thank you. That's all the questions. Thank you.
Thank you. And there were a couple of questions asked about the how much have we completed on our efficiency improvement program, and the reason I'm not able to comment on that because quarter to quarter it will vary. The monsoon quarter is a depressed quarter. January, March will throw up another number, and hence it is better to look at the efficiency improvement program deliveries at the end of the year. Having said that, we have already quantified the lead distance, the implementation of renewable energy and implementation of WHRS, which are very, very measurable, and from 400 that we started and we reached 377, 23 kilometers. 23 kilometers is almost $60. 23 kilometers is almost 70 rupees benefit, which is available as part of the efficiency program. Similarly, WHRS implementation, on the increase in the capacity of WHRS, the power cost keeps dropping by almost 90% on the incremental capacity. These are measurable numbers, but I would still want to reserve my comments for the end of the year. Thank you so much.
Thank you. Ladies and gentlemen, we'll take that as the last question for today. On behalf of UltraTech Cement Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.